Welcome to Arise to Live podcast, episode 167. We continue the series on solid business foundations for business owners. Today's episode is about why it's important to know 4 major types of capacity found in companies that impact profits. Arise to Live's purpose is to bring clarity and perspective so you can have freedom in both your business and family life. Let's listen in.
For a long-term, smooth-running company, it is important for business owners to know and understand the capacity of their company and in themselves. Why? Because capacity is a key part of dealing with the business environment that you are in. Like the captain of a ship, knowing what the ship can or can't do when facing a storm. Understanding the capacity of your company grounds you with reasonable expectation that just leads you to better decisions and avoiding some pretty serious mistakes. Hello, everyone. I am Scott Weaver, the Arise to Live business coach, and this is episode 167. Thank you so much for listening in today. This is the second episode in the Solid Business Foundation series. Each episode is more or less standalone, but together they add up to be more than the sum of the individual parts. So I encourage you to listen to the whole series, and please tell others about this too. There is a couple things that I'd like to share. First is that I am in the process of writing my first ebook. It's about creating a vision for your company that matches who you are with your business goals. The manuscript is done and I am in the editing phase. Did you know there's at least 5 different types of editing? Me neither until I got into this. It's been crazy. But I want to produce a good, high-quality ebook that you business owners can actually use. None of the fluffy, puffy stuff that we see so much out there on the internet. Second, there are some updates to the services that I do. Not only is it about the coaching, but also doing consulting. So coaching is more guiding, while consulting is guiding and doing some of the work inside the company. My ability to know the stuff and know how to do the stuff is one of my greatest competitive edges. I am now highlighting that more for those in the manufacturing and construction industries. Please sign up on the Arise to Live website for a free coaching session if you or a business owner that you know needs deeper insights than the Arise to Live podcast can provide. Alrighty, on to the main topic. For business owners to run their company, and that includes their personal life and family, to run a solid foundation, they need to know at least 4 areas of capacity: operations, financial, personal, and vision capacity. I know that talking about business capacity is a little like talking about changing your oil in your car or making sure the lug nuts on your tires are tight so the wheels don't fall off. It's boring. I get it. It is not the most exciting thing, but it is also one of the very important things that can increase your cash flow and to get you growing. It's something that the successful owners and founders, they think about this every day. When you account for the company's total capacity abilities, you make smarter decisions with less stress. You also know where to pinpoint your improvements. For example, if you don't know the capacity of your employees, either in hours worked or their skill set, and then you ask them to do something that's beyond what they can do, well, you're setting them up for failure and getting a boatload of frustration on top of it. And then the task is probably not going to be completed on time or with the desired quality. These are not good things. Let's talk about what capacity is. Let's start with a statement that all people have some sort of capacity limitation. The proof is simple. We have an upper bound limit of 24 hours a day. That is the maximum amount of time allocated to us. That is our time capacity per day. We live our whole lives with that limitation. And as a result, there is a zillion personal productivity tools out there to help us to make the most of it. But capacity is not a limitation. Yes, they are a bit similar, but again, capacity is not the same as a limitation. We all have a limitation of 24 hours in a day, but we also have the capacity of 24 hours. What are we going to do in that 24 hours allocated to us? So capacity is the ability to do something. It's not a barrier. Yes, sometimes we need to increase capacity, but when we say that, we really mean that we are increasing the ability to do something. Your company has capacity too. For our purposes in this podcast, your business capacity is the same as revenue capacity. Again, business capacity is the same as revenue capacity. Revenue capacity is the maximum revenue your business can consistently generate over time. This goes beyond just operational capacity, where that is the maximum output that can be sustained in a perfect world. Again, the business capacity is really revenue capacity, and that is why I included 4 different capacity areas. They all impact revenue. They all impact success. This emphasis on revenue echoes my previous episode on right-sizing your company. To right-size your company, you focus on what revenue is required to do what needs to be done. The business capacity is related because it quantifies or clarifies the amount of stuff that can be done. How do we estimate capacity? Well, I will say that figuring out the exact amount of capacity is pretty hard to do. It can be done, and all the huge manufacturers out there, they have teams of gurus to figure this out. However, for the rest of us, we need to make estimates, and that is done by calculating the upper bound of capacity. Upper bound is the maximum that can be possibly done in a perfect world. In this case, the basic equation is pretty simple. It's resource productivity multiplied by time. Whatever a resource is doing or making, and how long does it take to do that? For example, one upper bound calculation is if all your employees worked a perfect week to get stuff done, say 40 hours to make 1,000 widgets in this perfect world where machinery doesn't break down, materials always arrive on time, employees take no vacations or need to take their kids to the doctor, and there's no difference between the rookies and the veterans. Another upper bound example would be using those perfect world sales specifications for your machinery. Say one machine outputs 100 widgets per day, and it never needs material to be loaded, and somehow all those widgets magically get taken off the machine. Oh yeah, it never needs maintenance or repairs. Yeah, us business owners would be speechless if that ever happened. That would be like being in operations heaven. Yes, upper bound capacity is easy to calculate, and that is why they're used. Of course, it's a perfect world, but they are still useful in planning and estimating slack. Let's say you want to double revenues from last year, and your company depends on a certain piece of equipment. You can estimate your company's output to do that. And then, and this is key, then compare it with the upper bound that machine has. If doubling revenues is higher than the upper bound, or even close to it, then you are buying a new piece of equipment to meet your goals. This estimate can be figured out fairly quickly. Capacity is also related to slack. Slack is the difference between capacity and you're in one of the capacity areas. Now, I do want to say something about real-world operations. Generally, it is not good for a business or a person to be operating at maximum capacity all the time. One reason is opportunity. When a customer asks you to create a new high-value product, you don't have the slack or the capacity to do it, and so you lose out. The second reason is if there's a problem, any type of problem, a disruption in the supply chain or an equipment failure, no matter how small, then you are not going to meet your promised customer deliveries. And so it is risky to operate at 100% for long periods of time. When I was in business school, I heard that many corporations operate about 60% capacity. That might work for a major multinational company, but not for smaller companies in business. I would expect them to be between 80 and 90%. When customer orders lead to over 90% capacity, it's time to start thinking about increasing capacity or dropping low margin products. Again, slack is important to adapt to the unexpected. 2 points here about capacity for business owners is that they can quickly estimate the upper bound capacity, and it is very risky to continuously operate at 100%. Let's dive down into the 4 types of capacity. In the real world, business capacity is just not set only by operational resources and efficiencies. There are at least 4 types of capacity areas that impact the revenues. Remember that business capacity is revenue capacity. So it is important for business owners to know what each capacity area is. Otherwise, planning and forecasting can end up with the wrong answers and ultimately the wrong goals. The first one is operations capacity. At the highest level, operations capacity is basically producing stuff you can sell. Stuff could be widgets, it could be houses, it could be services. The usual suspects for this type of operations include machinery and employees. A machine or a computer can only operate so fast at a certain level of quality. I know we talked about this earlier, but please let me recap here in different words. The upper bound perfect world machinery capacity is widgets produced by operational hours. That is the best the machine can do, the best the machine can ever do. And it doesn't include maintenance, or load time, or repairs, or training time. The second thing under operations capacity is employees, both in the number and the skill level of your workforce. Your employees can only do so much and only can work for so many hours. This basically sets a production capacity limit or ability. If you are pressing them and trying to get them to go beyond their full capacity, that's like trying to put water into a glass that's overfilling. At best, there will be tension and frustration. The worst is overcommitment to customers and employees quitting. Of course, there is more things that impact operations capacity, and it might be good for you to list them out on a piece of paper after listening to this episode. Another company ability is financial capacity. I'm not just talking about money in the bank, but your access to cash that you can spend on your company. All entrepreneurs have the need to raise money for their company, and there's only basically 4 sources: your savings and assets, customers, loans, and investors. To increase financial capacity, 3 out of the 4 sources require you to convince others to give you their money. And that's a tough challenge. Third capacity is about the business owner themselves. It's about you. And often it's called personal capacity. And for clarification, I'm not talking about the legal definition of personal capacity. That is where a person can act on their own and not act as a representative of some organization. No, we're not talking about legal things here. We're talking business. It takes a lot of time and energy and brain power to run a business. Your personal capacity defines so much of what gets done and what doesn't get done. This is pretty important. It's so important that in John C. Maxwell's book, The 21 Irrefutable Laws of Leadership, the very first chapter, chapter 1, is called Law of the Lid, and it talks about your personal leadership ability and increasing that. The final capacity ability is vision. Now, some of you might be surprised that I included vision as a capacity area. The vision capacity here is the ability to have creativity and ingenuity to see what things could be. And that ability comes in various sizes among people. But at the end of the day, creativity and ingenuity, these things they can improve your company, or not having them can stagnate your business. So vision capacity is important. We can't say that your vision for the company is the destination that you are leading it to, leading the employees and your team. The bigger the vision, the more forward-thinking the business owner is. Sometimes business owners just get into a rut. They get so focused on the day-to-day operations, they can't see a better future. Like an owner refusing to buy a $10,000 machine upgrade to reduce employee stress and to increase revenues with high margin products. That impacts things in the long run. So yes, your vision of the future, your vision of the company impacts your future revenues. Regarding about improving capacity, well, I wish I could give you a simple list of how you can improve everything in these 4 areas, but that's going to be very difficult in a podcast. Every company is unique. Every business owner is unique. They have different goals and different skill sets. And there's also a lot of resources out there in each of the 4 areas. Let's take lean manufacturing, for example. That topic has many websites, many books on it, and there's even university courses. And I think you can probably get a degree in it. So lean manufacturing is an area for an operations capacity to improve it, and it's a deep dive, too deep for a podcast. But one thing I can say that is common about improving capacity in all areas is that it requires some homework and it requires thinking time. Thinking about your company, thinking about what could be better. What's a better future look like? And to be honest, this takes time, and it takes time to see through things, takes time to understand what the bottlenecks are in each of the 4 areas. But it is worthwhile doing because it heavily impacts the revenues coming in. So recapping here, in this episode, capacity is not a limitation. It is the amount available to use. Don't think of it as a barrier, but say, hey, I got this much to play with. Business capacity is revenue capacity, and this understanding is key to running a strong company. Many, many successful business owners understand this, and that is one of their secrets. Calculating the exact capacity amount, it can be challenging, but we can estimate the upper bound capacity by using the basic equation, resource productivity multiplied by time. And this upper bound capacity is the perfect world, maximum production possible, whether in widgets, service jobs completed, access to cash, or creativity. It's that point where it never gets better than that. And when you're doing forecasting or you're trying to estimate revenue and figuring out how much you need to sell, it's very helpful for success to compare it to your upper bound capacity and see if you need to buy new machinery, need to hire more people, or just improve efficiency. The 4 main capacity abilities in this podcast are operations capacity, financial capacity, personal capacity, vision capacity. It is worth the effort to identify the upper bound capacity in each of these areas and estimate how much slack you have. Are you running too hot for long-term success, or do you have some excess to go faster? Just answering those questions will direct you on a different path. When you understand how much you have to work with, you make better decisions for your company, and that is one way you arise to live.
Today's sponsor is Arise to Live Business Coaching, a professional and structured system to get business owners to grow and gain freedom from the chaos of running a business. Scott uses a proprietary 4-step system to get you the results you need. Start running a thriving business, not a self-created job. Schedule a call today on the AriseToLive.com website.